Welcome in. I am the Crypto Bull God, and this is all in the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment. You gotta click that bell icon for all notifications to know when I go live each and every single weekday on the YouTubes. Juan, let's fucking go. Greg Black, aka Black Oil, good to see you in here as always. I hope everybody is having a nice day today. I'm having a little glass of, I don't know if anybody here is a wine connoisseur. I haven't had this wine in a long time. It's butternut Pinot Noir. It's actually, I wouldn't call it a personal favorite. I've had a lot of wines, and I don't mean for that to sound like a dickish, snobbish wine comment, but it is the truth. I've had a lot of wines, but I haven't had that one in a while. Picked it up, but I like Pinot Noirs. I prefer reds over whites in generalities. Drop me a comment. Feels like it's Thursday. Do you agree or disagree? I was in the shower. Ooh, TMI. And I was thinking of what I wanted to speak to coming out to this live stream. And I was thinking, well, it is Thursday. And I was like, wait a second. No, it's Wednesday. Because tomorrow's Thursday. And tomorrow will be the TA Q&A segment for this live stream. So today, really what we're focused on, what I wanted to spend some time on that I had tweeted out here. Kevin, good to see you, my friend. Very good to see you. J. Kim, I don't know if I'm the GOAT. I wouldn't consider myself the GOAT, but I'll take it. I appreciate the compliment. In thinking about what might be value added for a discussion to have, given the point of where traditional equity markets are at, and crypto is at, because the two are closely correlated together. If you haven't been paying attention, that's something that you should put on your to-do list, is to understand the direct correlation which exists between traditional markets and crypto, and why that should be important to you to be a well-informed investor within the cryptocurrency market. Being positively correlated, which implies that in general, the direction for both traditional markets and crypto will move parallel with one another. It does not. I heard a lot of ignorant people throughout the course of this year. I don't know if they were really more so ignorant or more so they felt like they could grab something from the headlines to lead you astray with some sort of emotional narrative. But a lot of people were really confused on the notion, in my opinion, based on what I was hearing, that at times traditional markets and crypto can decorrelate. There could be weeks going by where they're not moving in the same direction, but eventually they catch up with one another. This is a general principle that has played out within the charts, and it's a general principle that I have consistently been hammering home on all year, last year. And I would say, when I've looked at a lot of big picture calls that I've had, that I've gotten, we're gonna talk about the ones that I've gotten correct. So in looking at the big picture calls that I've gotten correct, smaller trades that I've gotten correct, I don't think there's a bigger macro perspective call that I'm more proud of personally and feel good about than was this. Now, in late 2022 and for the entire year of 2023, there's been nothing but doom and gloom. I should say the majority of what I saw on YouTube, the majority of what I heard and saw on Twitter or X, was a lot of negative talk about why the stock market was going to roll over and we were going to have a 1929-esque crash or even worse. But at least, even if you weren't in the camp of that far doom and gloom, at least the general chatter was that we were going to roll over. I saw way too many videos, guys. I'm so glued into various channels to try to learn as much as I can, gain different perspectives. I think that's very important to be a well-informed investor. And so, I spend a lot of, it's interesting, especially during the period of time last year when I was single. I do find that when I'm single and I'm not in a relationship, and this is probably going into too much information, but when you're in a relationship, and this is not a knock against relationships, I'm not against relationships, I'm just speaking the truths here, folks. When you're in a relationship, you tend to do a lot of things together, and a lot of those things together that you enjoy, at least what I have found in my lifetime, aren't generally educational in nature. So when I take it, if I were to say to you that personally in my free time I love to learn, I can't say that me and my significant other are going to sit down and watch YouTube videos and have a lively discussion about traditional markets and crypto. Nor actually would I want that in my relationship. I would not want someone like me. That would be pretty fucking boring. And so one of the benefits that, there's pros and cons to everything in life. One of the pros to being single last year was that, for most of the year, was that I had even more time to digest so much going on in the market, even with all the craziness going on with my health that sort of took over the latter part of last year. Mid to latter part. But regardless, where I'm going with this is one thing became crystal clear to me. And the thing that became crystal clear, if you appreciate the realism talk, I'd appreciate a little bit more love on the likes, guys. Helps to spread the algorithm, especially for a guy who's just coming back to YouTube and trying to reestablish himself on YouTube. I've noticed the knock in the algorithm lately, so that's been a little bit of a hurt, but I'll get back there. But one thing became crystal clear to me, and that was that the general consensus was that we were going to have a very large correction in 2023, and it never panned out. Consistently, if you go back and look at my YouTube videos and you look at the Twitter content, and you look at everything that I spoke to, two things were always very evident. I never stated to you a certainty. I always said that there was a probability for any scenario. That's something I've always consistently, that's an oxymoron. That is something that I have consistently stated on this channel no matter what it is about. And the second thing that you will find is that I was consistent in my statements about a melt up before a meltdown, right? Money market managers really fucked a lot of people over. And the one thing that I did say to you, I even remember in September I came out here and sort of joked about my parents, or at least my mom, and she was freaking out over this correction, right? Beyond telling her at her age she should be invested, her and my father should be invested in a way where they shouldn't be sweating market moves. That's a separate conversation. The second thing I said is you can't expect a 50% move up without getting a 20% or whatever this was, 15% retrace. And so I tried to keep perspective for her, but she doesn't have the education. It's just all emotion. And so, you do what you can. So, but the point is, it's been nothing but doom and gloom, right? So the other thing that I've shared with you is once we started to break new all-time highs, that is when you're really going to see a lot of people start to enter into the market. It's reverse psychology. I understand this. To those people who are veterans in investing in market, the time to enter the market is not when it's creating new all-time highs. The time to be entering the market is to be DCAing in at sensical levels based on being able to read a chart. I often laugh to myself now, having so many years of technical analysis background, I think to myself, how do people actually make sensical decisions on where to buy or where to sell if you can't read a chart? I have no idea. But in any respect, all these prior price levels down here were the areas where you should have been buying up in traditional markets, and the same goes for crypto. Well, the way that human psychology works, because charts have human psychology baked into it, you're going to get a lot of people that are going to begin, and risk managers lost a lot by not getting in earlier, so they're going to be piling in as well. But you're going to get a lot of people in the market that's going to create a lot of froth. That's how a bubble comes to be, right? People that don't know what they're doing. Most people are not well versed in finances. They're not well versed in, obviously, cryptocurrency technologies, the stock market. They're not well versed in politics. They say and do things based on the environment under which they were conditioned, and based on following another faction or idea, or following basically how they were born and raised, but basically not having any educational background, right? And so as this froth is created within the market, what I've stated to you is it's going to become increasingly a risk-on environment. And in a risk-on environment, there is no asset class, because right now it's just considered one asset class, which I think will change over time. but there's no asset class that will benefit more tremendously than cryptocurrency technologies. You could also argue artificial intelligence, which is interwoven into some of these crypto plays. But whether you're talking about AI or crypto, as we predominantly speak to on this channel when we're speaking to crypto, there is no better sector to be invested on during this sort of environment. Okay, so what I'd like to do real quick with you, I'd like to spend today's discussion having a firm understanding of where traditional markets are at today and what that could imply for Bitcoin. So we're going to speak specifically to Bitcoin. I did toy with the idea of looking at the total crypto market cap instead of Bitcoin, but I think actually it would be better to use Bitcoin. And the reason it would be better to use Bitcoin is because if we can start to feel confident in terms of when we could realistically start to see an all-time high within the price, that should, based upon history, tell you two things. One, where Bitcoin's price is at and where it could be going. And two, when a lot of your altcoins are going to begin to experience those massive moves, because that's not going to happen until Bitcoin breaks its prior all-time high, 69,000. Now, if we looked at a total crypto market cap, some of that it would create noise, right? We wouldn't be able to look singularly at Bitcoin versus altcoins in our mind, if that makes sense, given the fact that we're going to be comparing it to the Bitcoin chart. But again, stated differently, by comparing moves in all-time highs with traditional markets to Bitcoin, it should make us better informed in terms of what we could expect for all-time highs and massive runs in altcoins for Bitcoin and altcoins separately versus looking at a total crypto market cap where it creates noise and everything gets blended together. Earthwalker, welcome in here. Any thoughts on the reverse repo market? Also love to hear your thoughts on, I don't have any thoughts on ABT, my friend. I'm not familiar with it. But we can take a look at it tomorrow. If you're back on the live stream tomorrow, I'll take questions tomorrow. Kyle, what's up, my brother? Evan, welcome in. Any thoughts on the reverse repo market? No, I don't have any thoughts. I haven't been following anything closely there. So, although I have a few things on my to-do list. I don't know if I'll get to it this evening or tomorrow morning, but you're going to make me do some Google searches because I haven't been following what's been going on with anything going on in the reverse repo market. No, I haven't been paying attention. Okay, so first thing is first. In terms of the immediate price action on Bitcoin, there's nothing here to inform you guys about over yesterday. That's just me keeping it real with you. Nothing significant here besides the fact that, I did speak to these higher lows coming in on the RSI. That's why there's an ascending line here. So far, it looks like that could pan out. We're getting a little bounce here. Would love to see us come down. When we do come down, maybe maintain some level around 30, upper 29s, 30s, and then just continue doing this as price just kind of consolidates. Because again, just to reiterate what I indicated yesterday, if price were to do something in that fashion, that's one of those first leading indicators I look for: divergence, positive divergence, bullish divergence on the RSI on some of these lower time frames. 12-hour has a lot of historical significance to it. But the other thing in layman's terms is what's happening is as price is consolidating and going sideways, you have a lot of strength building within the price. So again, what I routinely do on this channel, I love to repeat common things that you find on these charts. That way you know the staple things, the things that should be in your pocket that are just like that. When you pull up a chart, you know what to look for. Let's take a look at the Dow Jones. Now, the main point of comparison I'm going to compare Bitcoin to is the NASDAQ. That is because if you hear a lot of the chatter out there, the way investors, whether right or wrong, think about Bitcoin or think about crypto technologies, they think about it as a technology stock. So I think it's most appropriate to compare it to the NASDAQ. But let's take a look at the Dow Jones. A couple things to point out on the Dow Jones. The first thing is something I've been following for a very long period of time. 3-month chart on the Dow Jones Industrial Average. The reason we can look at a 3-month chart is because we have so much price history, right? It's a lot easier to discern things on a 3-month chart because of the price history going back before 1900 on the Dow Jones even if you wanted to consider tracking pricing history since the 20s, we have 100 years of price data versus Bitcoin's roughly, 12 years or 13 years, right? So looking at a 3-month chart is a little harder for Bitcoin. You're consolidating a lot of price data within a short period of time. So here, one of the things I want to call out, I've been following for a while, if and when it does break down, we have some massive bearish divergence on the RSI. Now, the fact that we have bearish divergence on the RSI that I've been calling out since 2019, if you've been a very early subscriber to the channel, the reason this is so concerning is because not only is it occurring on the Dow Jones Industrial Average, but it's such a high time frame, right? So at some point, a couple things I don't like to see here. You could also make the case we see a descending triangle. We're going to come down here. We're going to revisit this area here. When this does break, it's going to be interesting to see if we break all the way down here and create some sort of falling wedge, all the way down to this 34 to 35, 36 area. Okay, so something on a higher time frame that I'm following, something that does not mean that the Dow Jones can't go much higher this year. In fact, if you understand what's going on in the chart, what could happen is price, which I'm actually in the camp of believing at the moment, 2024, we are going to continue going up in the Dow Jones. We are going to continue to create a higher high here. But what's going to happen is we're going to put in a lower low on the RSI. Maybe it comes up to here and we're going to roll over, right? That is my current view. So, but if we look at more immediate price action, we can see we broke well above all-time highs. All-time highs were back here in January of 22, and you can see how far above it we are. Let me put a line of support there. So the Dow Jones is looking very good, right? We actually back tested that area practically. We're in new all-time highs. I think the Dow Jones was the first to hit its all-time highs. Dow looks good. S&P, we've spent so much time talking about the S&P. I don't want to spend too much time on this because I want to get to the NASDAQ Bitcoin comparison. We have spent so much time on the the S&P here. Again, go back to my my videos from late 22 and 2023, consistently saying we would see a very strong push to the upside. We would put in new all-time highs within the stock market by the end of 2023, early first quarter 2024, and look, we did it by the week of January 16th, right? So now, if we don't, the thing is, right now, let me be crystal clear about this. Right now, this could be considered a double top. A double top by nature does not need to hit the exact price point. It needs to be roughly within, it really depends on the asset you're talking about. Smaller market caps are going to have more volatility. In this case, we're talking about an entire indice of different stocks. Typically, it's 5%. You can see the high here was at 4,818. Right now, we've hit an all-time high of 4,903. I don't need to do math on that. That's definitely less than 5%. So right now, if we did come up, okay, we hit this area, and we hit somewhere here, this could be a double top. There's no reason we couldn't roll over, right? That is a possibility we need to be prepared for. However, I do not think that that's going to happen. Whether the stock market tops out late this year, okay, or it tops out early in 2025, you know where I'm leaning. I'm leaning towards things topping much earlier than people are anticipating, followed by a bloodbath. But the fact remains there's been a significant amount of strength in this chart. If we go to the weekly, yeah, I mean, we're looking very healthy. We're looking extremely healthy. There's no reason we can't continue churning higher, okay? See, the S&P is looking good. Now, the NASDAQ is well above its prior all-time highs. This is not a double top. So the prior all-time high set in November of 21, the high there was 16,764. The high now is 17. Let me actually look. Could that actually, maybe the scale is deceiving. Our high is 17,665. Let's turn on the light here. And that's divided by, let me see, 16,765. And that's we're right there at 5.4%. Okay. So if this is a double top, indeed, we're going to be topping very soon. And there is a probability for that. And there's a probability we could just roll over. Now, the other interesting thing that we'll have to see how it plays out, what I've indicated here, and I'll have to recheck the accuracy of this, based on when the Federal Reserve paused interest rate increases, which we're not going to be increasing anymore. Very good Pinot Noir. And we took a look at this twice on two different live streams in both the third and fourth quarter of 2023. The question we asked ourselves, and perhaps I'll consider updating everybody maybe closer to mid-year or once actually I think a good refresher on this would be once the Federal Reserve does indicate they want to decrease interest rates, we'll revisit this chart. Until then, I've already spent 2 live streams on it. But what we did is we looked at when the Federal Reserve paused interest rates, declined interest rates, and then the decline ended, right? And we looked at the market reactions in that. You can see purple increase when they started increasing interest rates. The line was getting too colorful, so I didn't include the purple. But we spoke about the pausing, declining, and declining ending, which is more relevant to our current time, and asked the question what the history of price movements were and where the stock market and subsequently crypto were at. Well, what we're trying to answer right now, so let's not pay attention to the vertical lines. What we're trying to answer the question now is when the stock market created new all-time highs, how far away was crypto from creating new all-time highs or Bitcoin within the stock market or within the crypto market? So again, let me reiterate that because I jumbled over my words. When the stock market hit an all-time high, where was Bitcoin at within its price movement to hit an all-time high, which would indicate to us 2 things. The fact that Bitcoin is hitting a new all-time high, there's a lot of euphoria in the market, and 2, it would signal to you a true massive alt season as money would begin to flood into your alts, and you're going to see alts going absolutely crazy like they did in 2021. It's going to be awesome, and I cannot fucking wait for that. So let's go back. Now, I did not look at this prior to the live stream, okay? So maybe it would be good to start in 2013, not this price movement here, but maybe when we topped in November of 13. Okay, so we topped, you can see this is a weekly chart. We topped the week of November 25th, 2013. If we go to the NASDAQ, oh, wow, 2013, geez. Was that 2013, really? Sorry, I'm getting lost over my charts. Now, this is really interesting. See, I didn't expect this. Okay, so this was November 25th, 2013. You can see we actually, and this is why I didn't want to go back this far. I think it's more credible looking at 18 when we topped at the end of 17. You can see not a lot of positive correlation at this moment, actually, because here we already topped in September, so Bitcoin did lag, and I would say, okay, well, that's actually a good finding. So the first time that we're counting a new all-time high in Bitcoin, we're saying that it lagged when the NASDAQ hit its all-time high. And that would make sense. Bitcoin was a much smaller asset class, so there was a little bit of a lag factor there for money to get into that for a risk-on environment. People took advantage of the NASDAQ, so because it's a larger indice. But you can see as we rolled over and we went into 14, we started hitting all-time highs as Bitcoin was in a massive correction. So I don't know what the size of Bitcoin, if it's really fair to look at. Let's look starting in 2018. So I think the time period I prefer to look to, I'd like to look at a sample size of 2. And unfortunately, there's not a lot of price data here. We're going to look at 2017, and we're going to look at 2020 as we started to create our new all-time high here and have a blow-off top. So those are the 2 time periods we're going to look at. So if we go to this time period here, we started breaking our all-time high around February of 2017. Where was the NASDAQ? So this is interesting. This was the prior all-time high, and we had a double top in the NASDAQ, right? So where was the NASDAQ at in February of 2017? Well, we started creating our all-time highs here. So Bitcoin was right around this time period in here. So we lagged creating a new all-time high in Bitcoin by maybe, we'll call it 6 months. This is the beginning. About like 6 months. So there was about a 6-month lag in this case. And then when we eventually topped out, it was December 17. So we had this huge run up. And then we just sort of, we continued actually going up. Now you can see Bitcoin actually topped here and had a massive correction 18 going into 19. But here, we actually double topped. We had corrections, but we ultimately created a little bit of an all-time high before we got our COVID breakdown. So I would say the conclusion I could reach from this is that in reaching, what I would say is my conclusion from the first top we're looking at here is that Bitcoin lagged the NASDAQ by around 6 months until it created its all-time high. But as also it was correcting, there was additional strength. There was more strength in the NASDAQ to actually push higher to ultimately create a new all-time high once again before rolling over for the beer virus. Interesting. Let's see what happened in 2020 and 21. So here, the stock market did not create a new all-time high. It created a new all-time high in April. So it very quickly, but it sort of was stuck in this area. Quite honestly, these were like double tops, triple tops. We really didn't start to break out in the NASDAQ until the last week of October 2019. So what I'm saying is, I would argue, even though the highs here are higher than here, this is like a triple top area, okay? We're not going significantly above and then we're going right back below. It wasn't until the very end of October until we started to create new all-time highs. Now, if we go to Bitcoin, what happened with Bitcoin? Really struggling with the tools doing this on the fly. With Bitcoin, we really started to break out with this candlestick, which was the same week. So here, interestingly enough, as the NASDAQ was breaking out, there was a higher level of correlation from a timing perspective on when the Bitcoin chart took off in relation to the NASDAQ. Now, the other interesting thing, we already looked at this, the NASDAQ also topped around the same time. So if we go to the NASDAQ, yeah, we topped in November of 21, and so did Bitcoin. I want to look at one last thing here. So Bitcoin really started to take off in 2017 in April. Let me go back to the NASDAQ for a moment. April of 17. Yeah. Now I would say we're in all two new time highs. Okay. So I'm just talking myself over here. But what I would say is that based on a sample size of 2, it's not really clear. It's not very clear, right? When Bitcoin is going to respond to creating a new all-time high. In the case of 2017, there was a 6-month lag. In the case of 2020, they ran in tandem with one another. So right now, the NASDAQ has already, it's double topped / created a new all-time high. You know, Bitcoin's back here well below its all-time high at $40,000 relative to $69,000. Could we argue the space of time we could use based on the sample size of 2 is 0 to 6 months? And so we should expect an all-time high in Bitcoin no later than by July of this year, I would actually say no. I don't feel comfortable making that assertion because, first off, as a statistician, your sample size is so low. You have two. But the other thing that's concerning to me is there's a deviation between those two sample sizes. Sample size one, when we looked at 17, it took 6 months until Bitcoin created its new all-time high. And then as it was correcting the entire year of 18 and 19, actually the NASDAQ was still, oh, wait, I'm looking at the S&P here. The NASDAQ was still pushing up, right? In the case of 2020 and 21, they ran perfectly in tandem with one another. We've already can throw out the scenario that Bitcoin is running in tandem with the NASDAQ, else it would have already created a new all-time high. The only thing I would be comfortable concluding from those that sample size of two is that as long as this is not a double top, if this proves to be a true breakout, and we are going higher, and you continue to see the NASDAQ push up towards, 18,000, 19,000, you're going to see a new all-time high in Bitcoin. It's just a matter of the timing that I don't feel comfortable, really feeling solid on. I mean, we have a 0 to 6 month time frame, but again, given that deviation, it's just too small a sample set. So for me, the only thing I feel comfortable in concluding from that is because it's a risk-on environment, and in the past we've shown that as the NASDAQ does make new all-time highs, Bitcoin eventually does follow behind it, whether it's at the same time or it lags it, to create new all-time highs. So bottom line to take away from, I guess a couple key conclusions to take away from the analysis is, number one, Bitcoin has a limited set of price data. And so as a statistician, as a technical analyst, we're trying to come up with creative ways to examine these markets and come up with something that leaves people feeling confident in making a hypothesis. But it's challenging. And so you have to be careful what sort of conclusions you're arriving to, because there's going to be a large standard deviation. Meaning there's going to be a large risk of error, a large margin of error, because of the small time frame. Number two is the contrarian view panned out last year. We are making new all-time highs in the stock market, okay, all three indices. Now, the thing is, there's a however here or a but here. We need to rule the double top off the table, right? So I need to see the NASDAQ start pushing above $18,000 for me to feel convinced. I need the S&P to start pushing over $5,000 to be convinced. And I need the Dow Jones to start pushing up towards, say, 39, 40,000 for me to feel convinced. If we can rule out the double top within these major indices, then we have a high conviction that Bitcoin will make a new all-time high this year. It's just a matter of when. We don't feel too comfortable with the timing. So I hope that you found that helpful. Of course, this is the weekly expectation chart I came up with back in September of last year. This is panning out really nicely so far. I'm sure there'll be a deviation at some point. In generalities, though, what I still feel confident in asserting to everyone here, I still feel very confident in the idea that by March, which is what I'm showing here, in March, we're going to be at $52,000 and higher. That's the main thing that I feel confident in asserting from this chart. Just trying to give you guys a relative area of confidence in where price is going to be. I do think we're going to be at $52,000 and above by March, okay? Maybe it's April 5th and I'm 5 days off, but you get the bottom line here. I think by March, we're going to be above $50,000. Let me see what quick comments I can answer, and then I think, guys, we're tapping out, and we're going to get some TA Q&A for tomorrow. I hope everyone found this helpful. And if you have any questions, and I don't have time to address it today, we can certainly address it tomorrow. J. Kim, I spoke to the correlation. Yes, in generalities, a positive correlation implies similar price movements. So up, down, down. Not up, down, left, right, BA, select, start. But yes, as one goes up, the other goes up. See it? One goes down, the other goes down. Just not day for day. I just pooped the couch. Very nice. What's up, Track? Good to see you. Hey, Dice Pineapple, I take a look at CAS very frequently. We actually just looked at it yesterday, so nothing new to update over yesterday's live stream. All right, guys, that's going to do it for today. So I will be back tomorrow. Make sure if you're popping over tomorrow, we are going to be doing TA Q&A. So I'm going to be addressing all of your technical analysis questions. Guys, you can come with charts. Like I'll chart any chart you want me to take a look at. But if you actually have just any educational questions, like what moving averages do you look at? How often do you look at Fibonacci retracements? Things like that. If you want any educational questions as well, or how I approach charting, let me know. You definitely get a feel for it on the live stream. But if you have any, or whose technical analysis I value, just any TA questions, drop by tomorrow. I think moving forward, at least for a period of time, I'm going to try it out just to see how the format works. But I think Tuesdays and Thursdays, I'm going to focus on just answering your questions. So with that being said, everybody, I hope you have a good morning, afternoon, and evening, wherever you're located. And until next time, let's all spread awareness. Let's carry that education forward. Take care, everybody.